Welcome. Today, we're digging into an analyst briefing on Netweb Technologies. Now, this company is right at the heart of India's sovereign AI strategy. So we're going to break down the bull case, the bear case, and see what it all means.
Okay, so first things first. To really get what Netweb is all about, you have to understand this big idea of sovereign AI. What is it? Well, it's all about a nation building its own AI infrastructure. Keeping it independent and secure. And guess who's at the very center of this for India? Yep, Netweb.
So as you can see here, Netweb has positioned itself as the absolute hub for India's most critical sectors. We're talking government, defense, and major enterprise clients. It's not just about selling boxes, they're literally building the hardware foundation for the country's AI future.
So what's got the analysts so optimistic? Well, it boils down to some really powerful, long-term forces at play. Let's get into the structural bull case.
The whole bull case is really built on what the report calls a structural triple tailwind. And what that means is you've got three huge, separate forces all pushing the company forward at the exact same time. It's like a perfect storm of opportunity.
All right, let's break these down. First up, you've got the global GPU shortage. This scarcity just drives up demand for the kind of high-performance computing Netweb provides. Second, there's government policy, which is really favoring trusted domestic players for critical infrastructure. And that, of course, gives Netweb a huge leg up. And third, you've got this massive wave of private cloud adoption, which needs exactly the kind of powerful custom servers that they specialize in.
And look, this isn't just theory. We're seeing it in practice. The recent union budget actually put some serious cash behind this, boosting the Bharat AI Stack by 15%. And the result for Netweb? Well, demand shot up so much that their main facility in Faridabad is already running at 85% utilization. That's a huge deal.
Okay, so favorable market conditions are great, but for long-term success, a company needs a real competitive advantage, a moat, right? And for Netweb, the analysis points to two big ones, their engineering chops and their key partnerships.
So that first moat is all about engineering. I mean, they're not just assembling parts here. Their own Tyrone brand servers have proprietary tech, like advanced liquid cooling, which is essential for these new power-hungry AI chips. This is what lets them compete with the big global players like Dell and HPE. And it's absolutely crucial when you're trying to win those sensitive defense contracts.
And the second moat, well, it's their partnership with, let's be honest, the king of AI chips, NVIDIA. Netweb has elite partner status. That's a really big deal. It means they get early access and can tightly integrate new tech like the Blackwell platform. You can imagine this creates a massive technical wall that's just incredibly tough for any local competitor to climb over.
So you have these powerful tailwinds, you have these deep moats, but what does it all add up to? How does it look on the books? Well, it comes down to this number, 45%. So, what is that?
That 45%, that's their compound annual revenue growth, or CAGR, for the last 3 years. And this isn't just a one-off spike. This is sustained, fast-paced growth. It's being fueled directly by the demand for AI servers, plus some big wins, like a recent defense order worth 120 crore rupees. And this isn't just about past performance either. When we look ahead, the company has a really strong line of sight, with a current order book that's now over 650 crore rupees.
But here's what's really fascinating. It's not just the size of the order book, it's what's in it. Just a little while ago, AI servers were only about 10% of their business. Now, take a look. They're 45%. That's not just growth, that's a complete transformation. It shows the company is right in the middle of this AI hardware supercycle.
All right, but no story is all positive, right? A good analysis has to look at the other side of the coin. So now let's switch gears and dive into the bear case and the risks involved.
So, what are the potential roadblocks here? What could go wrong? Well, the bear case really centers on a few key concerns. Okay, the biggest red flag for the bears is the valuation. The stock is trading at an 85 times price-to-earnings multiple. Now, to put that simply, that's a very rich price, and it means the market is basically pricing in perfection. There's no room for error. On top of that, you've got the risk of being so dependent on NVIDIA for supplies, and the fact that these big projects require a ton of working capital. So there you have it, a really strong bull case on one side, driven by these big structural trends, and a pretty serious bear case on the other, focused mainly on valuation. So how does the analyst reconcile these two? What's the final verdict?
The final call from the analyst is to view Netweb not as some short-term trade, but as a classic long-term compounder. And if you're not familiar with that term, it just means a company that can sustainably grow and reinvest its profits over a long time to generate even more growth.
So the key takeaway here is patience. The thinking is that it's just too expensive to jump in right now. Instead, the strategy is to wait for any major price correction, a buy-on-dips opportunity to get that long-term exposure to the AI hardware cycle. And that really leaves us with a big question, doesn't it? Netweb is clearly a major player in India's AI future, but at an 85 times PE, is the market already paying for that entire future today?